there's some big stuff going on here that is opposite. Okay, we think gold and silver are going to continue higher. Today's wobble doesn't impact us one bit in terms of our assessment. We think the stock market is topping and has a very, very dangerous situation below it that could easily come into play next month, meaning starting in a week or two. Gold had a little bit more than a 4% upturn from its low of the week to its high of the week. So they both said, I'm out of here. Okay, the congestion process that we saw, multi-month process, we think is over now. Now the question is more dynamics on the upside, and I think it's coming. Today is noise. Ignore today. I don't think today disproves that argument whatsoever.
Gold prices have broken out dramatically this year, soaring more than 24% to successive records. While the rally at the start of 2024 was underpinned by emerging market demand, particularly from central banks and Asian consumers and investors, the focus in recent months has shifted squarely to the Fed and the outlook for the U.S. economy. Gold, Treasuries, and the S&P 500 index have all typically risen as the Fed starts lowering rates, according to a Bloomberg News analysis of the past 6 easing cycles going back to 1989. Michael Oliver analyzes the situation and emphasizes the strong upward momentum of gold and silver, which stand out even as the stock market approaches what could be a precarious peak. Drawing on historical patterns, Oliver underscores the difficulties of stabilizing markets after a bubble bursts, pointing to precious metals as a reliable safe haven during turbulent times. The Fed lowered its overnight lending rate to a range of 4.75% to 5% from 5.25% to 5.5%. The first rate cut in 4 years as inflation levels ease from the levels seen 2 years ago. Stocks rolled over nonetheless despite Powell's comments. The S&P 500 is up nearly 18% on the year and more than 1% in the past 1 month. Oliver cautioned that while the stock market currently shows an upward trend similar to pre-crash conditions in 1987, there are underlying risks. He highlighted the possibility of a similar market event today, advising those holding silver and gold to consider buying puts on the S&P 500 if certain trigger points are hit. He believes technical dynamics have changed, making the upcoming market period potentially very dynamic and unpredictable. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
Its prior peaks in silver in May, which was much higher than gold's peak in May. Gold peaked in April, and silver went on up into May. Silver got above 32 then and dropped back down to about 29. And it got above 32 again in, I think, July. And then you had the big sell-off into August that got down close to 26. So really a deep cleansing. And you came up off that low pretty rapidly. And last week you were down to about 28. Next thing you knew, you're 31. Boom. So silver and gold have declared that process is over. The issue now is what's on the other side of this. And I think it's going to be very dramatic. We've got some tentative numbers that we're paying a bit of attention to. They're not a top. We don't expect a top in gold and silver. We don't think we're in 1980 in gold where you peak, or in 2011. We don't think we're in that situation whatsoever. We think it's likely to continue for another year or so. But in the immediate run, we could see a dramatic surge. And I think that the dramatic surge, for example, if you get silver back to 32 a third time. Now, think about this. If you're a point and figure guy, you keep it X's and O's. Upticks or X's, downticks or O's. You went up to 32, back to 29, downticks, back to 32, double peak, dropped down and took out the 29 low and went to almost 26. So the point and figure chart broke down, cleared itself out, and shot back up now to 31. You ever touch 32 again? That's what you call a pending triple top breakout. And I bet you touch 32, you're not going to stop. You're going to blow through. I think the surge in silver could carry us well over 50 rapidly. Now, that sounds ludicrous. Well, right now, there are some brokers out there, big brokerage firms, that are talking 3,000. That makes me a little nervous because, frankly, that's sort of a minimal pause point for us. So let's just assume gold in this surge is going to go to 3,000, which is another $400 beyond where we've reached today. Okay. If silver during that same process were to take its spread relationship to gold, which is now above 1.2 and pressing toward 1.3, if it were to go to 2%, which if you go back over the last 50 years and look at the silver-gold spread, price of silver expressed as a percent of gold, you'll see there are many, many years in that 50-year time where we reach 2%, 2.5%, even 3%. Okay, so it's not abnormal. If silver merely went to 2% again, which again is a level we've seen so many times in the last decade, for example, it's ridiculous. It's normal. Silver would be $60 if gold were 3,000. So I think that silver's dual highs that everybody knows about at $50. We get up through this recent stuff, we've been up to 32 again, and blow through that. I think that surge could carry you up into the mid 50s at least, well beyond the $50 peaks that everybody knows about. And I think that's the potential for this pending surge that I think we're on the doorstep of.
Looking at the precious metals gains, gold continues to set new records, with prices climbing past $2,600 an ounce, while silver is riding the wave of this upward momentum. However, one research firm predicts that silver will still lag behind gold in the long term. Last week, gold made another historic leap, rallying over 3%. Meanwhile, silver posted an even more impressive gain, surging 10% and breaking above $31 an ounce. Despite silver's strong performance, the firm believes it will remain in gold's shadow moving forward. Michael Oliver believes both silver and gold have now completed their corrective phase and are poised for a dramatic surge. He expects silver to test the $32 level for a third time, and if it breaks through, it could trigger a triple-top breakout, potentially driving prices well above $50. Oliver also notes that some large brokerage firms are forecasting gold to reach $3,000, which aligns with his own outlook that the rally is far from over. If gold hits $3,000, Oliver predicts silver could follow, potentially climbing as high as $60. Let's now turn our attention to the video again.
The process of correction in gold and silver that occurred after their surge in March and April, in the case of silver, March, April, and May, silver continued up a month beyond gold. Then we entered a multi-month correction in silver with some downside pain, and for gold, basically a yawn sideways in about $100 range, just up, down, up, the noise, in other words. But a congestion period where the gains that we saw, dramatic gains in about a 6-week period in March, April into May, corrected. And we had a pause, profit taking, shorts came in, doubted the market, et cetera. We think that ended last week's action, ended that process. In the case of silver went up, if you measure from the low of last week to the high, was over a 10% upturn, literally within a week. Gold had a little bit more than a 4% upturn from its low of the week to its high of the week. So they both said, I'm out of here. Okay, the congestion process that we saw, multi-month process, we think is over now. Now the question is more dynamics on the upside, and I think it's coming. Today is noise. Ignore today. I don't think today disproves that argument whatsoever. In the case of the stock market, we have a situation that is, I don't want to pound the table yet, but in 1987, I caught the crash. I was a broker at the time, independent broker, and I caught it in a small way with puts. Okay, I didn't make a fortune, but I made a huge percent gain in a very short period of time with some puts. And it taught me a lesson because what I did it based on was quarterly momentum of the S&P 500, not its price action. Price action of the S&P looked just like it does now, just upward, pull back, upward, pull, just happy market going all the way, going to go forever, you know. You pull back a little bit in early October, the new quarter in 1987, and though price didn't pull back in any meaningful way, when you looked at the price chart, you weren't breaking a thing. Quarterly momentum was blowing a floor that had established over a 2-year period, where if you looked at the quarterly momentum, it just kept coming back to the same horizontal level over and over, and finally in early October broke it, and you crashed. It was a surprise that nobody caught. It was a panic beyond panics. It happened back then. I've gone back and researched it. Gold was in a non-trending situation then, really. But gold during that bad week went up 7%. So somebody didn't tell gold it was supposed to go down if the stock market crashed. Anyway, keep that in mind, because I know everybody thinks that if you ever get an event like that in the stock market again, and we have the setup for it now, I'm not saying it's going to get triggered, but it's about 4% below where the NASDAQ 100 is right now next month. You don't want to be there. That therefore silver and gold must go down. And I think it's going to be a very interesting hypothesis because factors have changed, technical dynamics have changed, and I don't think that's going to happen. And if you think it's going to happen and you're long silver and gold, then I suggest you should better buy some puts on the S&P if our trigger numbers are hit. Okay. Anyway, I think we're about to move into very dynamic markets.
History shows that gold performed exceptionally well during periods of economic turmoil. From late 2007 to early 2009, the price of gold surged from around $700 per ounce to over $1,000, continuing its upward trajectory in the following years to reach nearly $1,900 per ounce by 2011. As we reach the end of Q2 2024, gold's resilience during such crises remains evident, largely due to its status as a safe haven asset. As the financial system faced collapse and traditional assets like stocks and real estate sharply declined, investors turned to gold for its perceived security and stability. What are the potential scenarios for gold and silver prices in the event of major economic or financial upheavals? Drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.